last week you gave us an update with Lucid Motors, but one of the companies in the EV sector that we talk about a lot that we haven't checked in on for a few weeks is NIO. Essentially, a lot of it having to do with some of the lockdown situation in China. Can you discuss any news or updates since we last talked about them in the last month or so?
Right. So I think the context here is that electric vehicle production is very dependent upon supply chains being normal. When supply chains are good, these companies can make a lot of cars and they can sell a lot of cars. Demand is not the problem in the electric vehicle industry. Every car these companies, especially the good ones like NIO and Lucid, can make, they will sell. Demand is always going to be there. Every unit of supply will be met with a unit of demand for the foreseeable future. So the question mark becomes on how many units of supply can these car makers produce. And throughout 2021, that supply constraints were really limiting the units of supply these companies could produce, and that weighed on their stocks, and that's continued in 2022. And with respect to NIO, it's actually accelerated in 2022 because of the lockdowns over in China. But there's now good news on that front. So Shanghai is moving to end what has been a 2-month lockdown in that city. It appears COVID restrictions are very dramatically easing off in China. So it does look like maybe they go back into a lockdown in the summer or maybe in the fall, but any lockdowns that do emerge in China are going to be very short and not all that intense or restrictive. So I think the market is now digesting this reality that the any future lockdowns in China will not be a major deterrent to production of anything, but specifically production of electric vehicles. So NIO stock is catching a bid on that. All the Chinese EV stocks are catching a bid on that. All EV stocks in general are catching a bid on that. And I think bigger picture, if you kind of zoom out there, the COVID lockdown situation in China was the last domino to fall, if you will, of supply chains rapidly improving. Across the globe, supply chains are improving. The COVID-induced supply chain disruptions of 2020 and 2021 are gradually improving in 2022. And I can give you a firsthand example of this. My wife and I tried to do furniture shopping in 2021. Mm-hmm. Every place we went to, regardless of the store, was a 2-month, 3-month, 4-month, sometimes up to 6-month backlog for us to, if we ordered the piece that day, it wasn't going to show up in our home for up to 6 months. I mean, it deterred us so much from shopping that we just said, forget about it. Like, this is ridiculous. 6 months to get a couch or 6 months to get a table, a coffee table. Not for us. We recently decided to roll the dice again and do, go out and do some window shopping for furniture. And this past weekend, actually it was 2 weekends ago when we went, not Memorial Day weekend, but the weekend before that, we were shocked. We were asking, okay, well, this list looks great. Well, how long is it going to take? What do 2-3 months out? And everywhere we went, they were saying, no, we can actually get these in 3 to 4 weeks for you, or 2 to 3 weeks, or in some cases, 4 or 5 days. So we started to see these furniture supply chains or these furniture backlogs that were deterring us from buying now becoming much more reasonable and pre-COVID normal levels. So we're seeing that normalization play out. The China COVID situation was kind of the last domino to fall. If that domino falls, and it is falling as we speak, then supply chains globally should rapidly improve throughout the year. That'll dramatically help NIO stock. That'll dramatically help all electric vehicle stocks. And it'll dramatically help all stocks in general. Because if you think about it, supply chains improve means supply goes up. Supply goes up, that is a deflationary driver. The inflationary problems we've been seeing should decelerate. That means yields go lower. That means stocks go higher. So this is a very important situation to monitor, and one that I'm getting pretty constructive on based on what I'm seeing in the market, what I'm seeing in the data, what I'm reading in the news. Supply chains across the world are getting better. They're going to keep getting better. As they do, inflation is going to become less and less of a problem.
Now, why won't potential future lockdowns have the same dramatic effect that we've seen in the past when NIO had to shut down for, weeks at a time? what's going to be, you said that, future potential lockdowns aren't going to affect it as
Aaron,
heavily.
there's a lot of it. It's not 2020, right? I mean, the Chinese consumers, citizens, they have access to the internet. They have Weibo. They have these websites. They know that COVID-19 is not a serious enough illness to warrant stopping the economy. They're well aware of that. There's been a lot of citizen pushback to the lockdowns. The Chinese government is aware of it in the sense that they don't want their economic expansion to be hampered significantly at a time when everybody else's economy is, back to normal or back to quasi-normal levels. So a lot has changed. The context has changed. The dynamics have changed. And as a result, the Chinese government can no longer institute harsh, prolonged lockdowns because the citizens are going to push back and their economy is going to get hit hard and it's going to significantly disadvantage them. So, I do not think that these lockdowns are going to be serious in any nature going forward. And the current one is ending. So I think we're going to get a multi-week, if not multi-month stretch here of normal China operations. Maybe we get another lockdown in the fall. That's when, diseases start to spread a little bit more quickly. But I think that lockdown will be much like this lockdown. 1-2 months, kind of hot spots all over, and then, reopen back up right after that. So I don't think that COVID-19 lockdowns in China are a risk that the market needs to monitor anymore. I think we've kind of moved past that.
So are there any other factors that are affecting NIO for good or worse right now, aside from COVID lockdowns?
Holy moly, Aaron. I'm sorry. I just looked over at my my little monitor over here, and fun fact, the NASDAQ was down about 1.5% at its low today, and now we're up 54 bips. So that's a very powerful 2% swing in the bullish direction. Price action is looking good. Anyways, sorry, Aaron, repeat your question.
No, all good. It's good to know that you're monitoring the situation regardless of what you're doing. So,
what was the question?
are there any other factors that are affecting NIO moving forward aside from the COVID scenarios?
No, I mean, like I said, it's all about supply. Every car that NIO makes, they are going to sell. Every unit of supply will have a unit of demand. That is 100% true. So now it's an optimization problem surrounding units of supply. How can they optimize that supply? On the demand side, I do like the fact that they've expanded successfully into Europe, and from reports that I'm reading are selling very strongly in Europe. I'm seeing murmurs based on LinkedIn job hirings and some reports that they're looking to get into America. So the story, again, I've said is 2022 is going to be the year of NIO expanding into Europe. 2023 is going to be the year of NIO expanding into America. And so I think with that demand expansion, if you get supply chain normalization, continued supply chain normalization, NIO's looking at a probably 2 to 3 year runway here where sales growth will be tremendous. Margins should dramatically improve, and the stock should work really well, especially from its currently depressed levels. So I really like where we are with NIO stock, where that stock can go into 2023, 2024, 2025. I think you got a good runway here with that name.
Thanks for watching HGI Clips. For the full episode, head on over to our sister channel at Hypergrowth Investing by clicking the link in the description, or listen to the podcast on any of your favorite streaming platforms. We make new episodes every Wednesday, so make sure to check it out and subscribe to never miss any of Luke's Hypergrowth insights.